We have with us Sanjay Kukreja, partner and CIO, and Rajiv Batra, director and consumer sector lead at ChrysCapital. Congratulations on your newest acquisition, Sanjay. As the new owner of Theobroma, what goals and visions have you set for the future trajectory of the patisserie and desserts chain?
We are very excited, to start a new journey. We are sort of attempting to build a Western desserts chain, in India, which is, Theobroma, starting from Theobroma, but also adding, different sort of products to it over time and really sort of capitalizing on the Western desserts chain concept. I think there are lots of things that this brand can leverage further into, including gifting as a platform and other products. So we're excited about the possibilities. Of course, we don't have anything clearly mapped out as of right now. I think we're going to spend time to understand the business, and it has a lot of potential to actually increase its reach and the number of stores, etc., which my colleague Rajiv is going to lead at the firm. And we're very excited about that opportunity.
Turning to you, Rajiv, Theobroma is also ChrysCapital's first buyout in the consumer business. Does Theobroma's buyout signal a more assertive pitch towards expanding the consumer portfolio through further acquisitions in the future?
No, definitely. What we are seeing today is very, very interesting. The share of buyouts, what it used to be about 10 years back versus today, is definitely increased. And frankly, a couple of factors have contributed to the same. First of all, the quality of management teams and the depth of talent has definitely improved. And even as people think of moving businesses from one generation to the other, there are opportunities where the next generation might not be interested. And those are actually situations where a buyout kind of situation arises that ChrysCapital or our similar firms can capitalize. So definitely we are looking to do that. And as of today, our share or the pipeline that we have is a good balance, and a large share of that is focused towards buyouts as well.
Sanjay, how does ChrysCapital view the consumer business landscape in India? Would you seek to boost investments in other facets of consumer-facing businesses like retailing, online and quick commerce and QSR also?
I would say, consumer is a very interesting space for us. It's something that we're very excited about building. I think a lot of people come to India for consumer. It is one of those things that we have a large domestic market, not affected by a lot of the global, headwinds that might be facing India at this point. So very excited about that. I think the consumption patterns in India are going to change as well. As India gets richer, what we end up consuming is going to be very different as what we used to consume, let's say, 5, 10 years ago. So it's a consistent pattern of change that we're seeing. And if you look at micro markets in India, you can actually see that change playing out even further, where markets like Delhi, Bombay, Bangalore, etc., where GDP per capita is closer to $8,000 to $10,000 per capita in pockets. You can see what that consumption pattern trend is looking like, right? Things like eating out, so QSR fits in nicely. Lots of other trends will play out in terms of how people consume and what they consume. And I think we're very excited about capturing those trends in India over the course of the next 10 to 25 years. Frankly, it's a long runway ahead. The consumer journey has just only really now begun, and we're very excited to be part of that journey.
Your thoughts on this, Rajiv?
No, absolutely. The way we look at the consumer sector, right? These are the exact four subsectors essentially where we're spending a lot of time. There is food service, there is packaged foods, there is retail, and broadly beauty and personal care, right? All our multi-billion dollar sectors are seeing very interesting trends from unorganized shift towards organized. And like Sanjay mentioned, even in pockets of large cities, right, we see premiumization as a wave, which is a reflection of the strong per capita GDP that these cities offer. And ideas to capitalize on those trends started off with a couple of these investments that we have. And yeah, look forward to this building phase over the next 10, 15 years.
Rajiv, staying on with you, give us some contours of the Theobroma deal. Like, what was the deal value and what stake the original founders, led by Kena's investment, continue to maintain in the company?
From a deal perspective, we have effectively done almost an 85% stake with the family owning the remaining 15%. Now, business today is doing reasonably well. From a presence perspective, we're in 260, 270 odd locations, 40 plus cities. Business on a trajectory perspective is growing at a reasonable clip of 25, 30%. And very profitable business, broad unit economics, and frankly, no need for further capital infusion to capitalize on the growth opportunity that India offers. And that makes it very exciting for us to take the journey on a go-forward basis.
Rajiv, would Chris Capital look to collaborate with the investment family, the original founders, in understanding Theobroma's business and also the company's culture, and also helping charting a future roadmap for the firm?
No, so absolutely. Idea is to work in a very collaborative manner. What the family as well as the erstwhile private equity owners have done a very good job is build out a very good team. And that's the team we're backing, which is led by Rishi Gaur and the other management folks. So idea is to spend a lot of time with the company to figure out what the brand truly stands for, and more importantly, how we can leverage the existing brand and get into new subsegments, whether it's gifting as a platform, which will definitely making sense, or other areas. Also do a lot of experiments around channel formats as well. And that's something which we'll be doing over the next couple of months.
Sanjay, has Chris Capital thought about any structural changes within Theobroma that you may think about now?
I think, like Rajiv pointed out, we are sort of effectively backing the current management team. Of course, we're going to, strengthen the board, get advisors at play. We will also strengthen the management team going forward as well. So these are things that we are sort of, working alongside the management. We have a very strong team, so I don't think we need any major realignment of any kind. I think the issue is how do we work together, and in those conversations we have over the course of last 6 months really aligned on a strategy, aligned on the the kind of people that we need also to kind of augment and build out on. And I think those are types of things that we will be doing. But really it's a we'll be doing it in a collaborative fashion, as Chris Capital always has, partnering sort of best in class founders, management teams. And that's really what we are going to do to continue to build and take advantage of the macro opportunity that we have.
Rajiv, does Chris Capital have any target about the investment you are seeking to earmark for consumer in maybe the next year or 2 years?
No, so at least we don't approach investing within consumer with any target in mind. The idea is to look at good businesses run by good management teams, and where there are opportunity to outperform the market, right? Frankly. So those are the tenets that we look forward. And obviously the business needs to have a strong unit economics model behind it. And as long as we find those opportunities, I think those are the ones to go after, rather than trying to have a goal of doing a deal or putting a certain amount of capital.
Sanjay, the cafe, bakery, and desserts business in India, it's expanding. If we see Theobroma, the current 250 plus store count, are you looking at an aggressive ramping of the count? And do you envision preparing Theobroma as a vehicle for your future acquisitions in the consumer space in India?
So I think, the second question is what I'll take, and I'll let Rajiv comment on the first one. But I do think, yeah, we would be keen on, expanding the footprint of Theobroma. And we have done active M&A, in fact, in our portfolio, not just in consumer, but overall. Inside our control deals now, Chris Capital has, done almost 40 to 50 M&A transactions in the last, 10 years. Frankly, we end up doing, 3 or 4 follow-on tuck-in M&As or larger M&A as well in each of our companies that we actually end up acquiring. So that's a skill that I think Chris Capital brings to the table in many of our platforms, and we feel very confident about doing that in this situation as well. So yeah, we would be looking forward to doing that very synergistically, building out the product portfolio, building out geographical reach, bringing out whatever sort of makes sense from a strategy and the plan that we put together. But specifically on the growth targets and all of that, I think Rajiv is the right person because he's going to lead and drive that.
Yeah, so just building off that, right? So if you see the last couple of years, company has done a pretty good job of adding 50 to 60 stores per annum. From a capability perspective, obviously, idea is to build on that. Definitely, there is good bandwidth and possibility to continue this pace, which the business will continue. And on an ongoing basis, we'll calibrate to see, can we add more? Should we do a bit less? But expectation of the bare minimum of 50, 60 stores per annum is a base case that we're looking forward.
Thank you, Sanjay and Raji, for joining us on this show. That's a wrap of this edition Startup Central. Thank you for watching. Stay tuned for more news and updates on ET Now.